Have you found out that many times you see the market hit your stop loss for it to then just go straight into target just after getting stopped out? And have you been slipped at those times where your stop loss has been triggered? Well, the reality is most of the traders don't know how to place effective stop losses, and they just go with what everyone else is told, which is to place them above and below certain swing points in the market, right? We're used to using swing points as potential stop losses, and that is an idea that I want to debunk because it's not efficient, it causes a lot of slippage, and it causes a lot of frustration, right? The idea of using swing points as your stop loss is one of the worst things that you can do to yourself, and that is why I never do that to myself, and I instead use the thrust break candle principle, which is exactly what I'm going to be going over in this video. I've talked about the thrust candle principle in many of my videos, but I've never really gone into detail about it, so that is exactly what I'm going to be covering in this video, so that you have a new idea on how you can place your stop losses so that you no longer get slipped and you no longer get stopped out and then see the market turn around just after being hit to where you originally intended it would go. So without any further ado, let's jump right in. Alright, so as we said, we're going to be discussing the thrust candle principle, and I'm going to be going over on the whiteboard just to make sure that everything is clearly understood. So what is really a thrust candle? Well, the first thing that we need to understand when it comes to thrust candles is that there are large candles that close beyond swing points. Now, that might seem like a little bit confusing to understand, but as we work with this graph here, you will realize that it is actually pretty straightforward. And we're going to be using them not only to place our stop loss, but potentially to use them as entry points as well, although you don't have to. I just want to pass on the idea of using thrust candles as stop loss areas. So once again, large volume candles that close beyond swing points. Now, I should mention at this stage that not only do they need to close beyond swing points, but they need to close above or below them. So what do I really mean? Let's follow this simple graph over here, and we're going to be using a different color such as red. So here we have the market initially printing a very obvious and clear to see bullish trend and bullish structure, right? We have a low, we have a high, we have a higher low, higher high, higher low, higher high. At this stage, anyone should expect that if the market pulls back into this area, we are likely to then see this kind of action happening, which is the market continuing to push higher. But we don't get that, right? Instead, we get a very clear change in the state of delivery, where we're seeing now the market push lower. Now, in these expansion legs that you see when the market is pushing lower, we need to be looking for thrust candles. And you're going to find them if the market is in obvious momentum. So let's denote the swing points first, just like this. And now we'll get through the thrust candle example, and after that we're going to be going into the charts because they're actually quite easy to identify. So definition for the thrust candle, once again, large volume candles opened above or below swing points, close beyond them. Okay, so these are the three criteria that you're going to be using to understand the thrust candle principle. Now, if we look at this once again, market structure, theoretical market structure, where do thrust candles can lay? Well, first we need to understand that they open above and below swing points just to close beyond them. So in this case, we have a swing point here, 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 and if this looks like this, we have another swing point there. Now, thrust candles, you're gonna find them anywhere in these expansion legs, and they are big volume candles or large volume candles. And what we need to see is a candle, and let me now draw the real example here, that looks like this. once again, if you follow what I've just shown you, you should be able to understand that this is a candle that, one, is large in volume relative to the ones around it, and we'll see more on that later. But not only that, but it did close above this swing point in this case, and it closed below the swing point. That is a thrust candle, and that is a candle that makes a lot of sense to use as a potential stop loss placement instead of going to the swing point, which in this case, if we quickly remove that, in this case would be clearly here above this high. We're gonna use our brain and we're gonna place our stop loss above the thrust candle instead, if it is that we want to go short, as an example, in a potential pullback and expecting the market to continue lower. So if we want to do that and we want to go short, do not place your stop loss above the swing point, not only because you have a high degree of probability of getting slipped, and you also have a high degree of probability of the market, right? If it want to stops you out, it's going to trade above the swing point here, and there is a degree of probability that it is then going to move lower. Why not instead use the thrust candle that if you're wrong, you're going to know about it earlier, and you're not going to get slipped because, well, there are not so many, in this case, buy-side orders resting above this high compared to the swing points, because we all know that as retailers, we're going to see many stop losses being placed above and below swing points, because that's essentially what everyone is taught. So let me give you the reason behind not wanting to use a swing point as your stop loss and instead using the thrust candle principle. And once again, this is going to get a lot clearer as we jump into the charts, but for now I just wanted to illustrate this in a little bit more depth. So swing points as stop losses. So why are they bad? Huge amount of orders, just like you, which means slippage. Okay, how many times have you just placed your stop loss above or below a certain swing point just to see that when the market reaches your area, it spikes, and when it spikes, you are not only stopped out, but you're also paying a huge price in actual slippage, which is not ideal because trading is already hard enough and you shouldn't be making it harder for yourself. Now, a huge amount of orders, because it's such a huge liquidity pool, the probability of the market seeing turn after your stop loss has been triggered, probability of turn after stop loss trigger is very high, right? Many times you will find when you're using swing points as stop losses that once you're triggered and you're out of the trade and you've been slipped, the market starts moving in the other direction because, well, simply that is where the market was reaching for. And it is something that you need to expect and be okay with if you're using swing points. Now, once again, when we're using thrust candles, these are candles that open below swing points if it's a bullish candle and closes beyond them, right? So a thrust candle would be here, a thrust candle would be here if these are convincing breaks, which is once again an important measure for your break in market structure, because a lot of people will tend to see a minor spike with a wick through a swing point and call it a break of structure. But in my understanding, I don't, because I'm looking for sustained momentum in one given direction. And if I want to see that, I need to see the market accepting multiple times beyond the break of structure point with the thrust candle on the way up. And that is how you're going to get high probability trades at the end of the day. If you're then pairing it with naked wicks, fib levels, discounts, fair value gaps fill, and all the rest of the source that you need to implement in order to have an effective trading strategy that's not going to guarantee success every time, but that is at least going to be somewhat consistent, and it's going to allow you to potentially reach a point where you're consistently beating the markets. Now, not by much, but you could reach a point where you're consistently beating the market. And once again, I went through why it makes sense from a liquidity standpoint, what the definition is, and what the problem with the other alternative for many people, which our swing point is. So with that explanation out of the way, we're going to be jumping right back into the charts, and I'm going to be going through some trades and some chart examples that are going to illustrate this point even further. Now, we're right back on the charts, and let's carry on where we left off. So we need to go through thrust candles. Now, if you look at this market, given the definition, which one would be your preferred thrust candle? And this is a trade that I'm currently short at, but I'm going to be showing you other trades that I'm currently in where the thrust candle is present. So where is the thrust candle here? Now, my opinion, and based on the definition that I've given you, let me quickly get rid of this. The answer should be clearly and very simply this candle right over here, this big bearish candle that you see. And let's maybe use a different size. This candle over here is your thrust candle. Now, why is it a thrust candle? Once again, it opened above this swing point over here, it closed beyond it, which it did over here, and then we accepted for multiple candles. So when the market eventually turns back up and goes to reach a naked wick, whether it's this breaker block that you're using, which would be perfectly valid here, this breaker block, or it is this naked wick that I've denoted in red over here if you follow it to the left hand side, that would be a good idea to be looking for a potential scale in, and that is exactly what I'm waiting for. Now, is it always going to work? No, but more often than not, you're going to get a reaction, and the thrust candle principle is going to hold on very well for placing your stop loss. As an example, when I got short into this market, you can see, let me see over here. Let's get rid of this and this. You can see that I shorted here with my stop loss above this high. I didn't go and say, hey, my stop loss needs to be above this swing point, because I know that if the market gets up here, then the probability that it's going to trouble a bit further into the swing point is relatively high. Now, there will be times when the market does not reach the swing point and instead moves lower for a bit before then purging the engineered liquidity in the form of a trend line or whatever it may be. But I'm more so comfortable placing my stop loss below and above thrust candles. And you can see that in this case, this thrust candle that I chose did not close beyond any swing point. But that is something that I allow myself to do, and it's written on my plan that I can base my stop losses on thrust candles even if they don't close beyond swing points, if the alternative means going to a swing point. So hopefully that made sense, and let's go through more examples. As another example, I'm currently long EuroCAD on the 4-hour chart, and you can see where I entered, which is right now hovering at break even. So we'll see how this trade goes, and I'm not going to go into the details about this trade, but it's very straightforward. Let's just quickly go through some ideas behind the trade. Once again, pool of liquidity here has been purged with this move lower. We see clear displacement and expansion to the upside. Yes, it is true to say that we reached a swing point here, but nonetheless we have an aggressive displacement to the upside. We have a return with space into a naked wick, which is where I'm entering. We have it lining up with discount 62%, and the key question, where is my stop loss? Well, you should be able to understand that this candle right here is a clear thrust candle, right? Once again, it has the characteristics. It opens below a swing point and closes beyond it. And it's relatively large volume compared to all the candles around it, right? So this would be a great area to be going to place your stop loss under, but it's not a great area in my case because that's too tight for my trade, and I'm not gonna expect that I'm gonna be so precise that I can reach a 1 to 6 like this and have a decent strike rate. Because I need to pair it with my decent strike rate, I use the same candle principle, but I just went back one more candle. This candle right here, denoted in blue, is another thrust candle. Why is that another thrust candle? Well, once again, let's go through the principle. This candle is relatively large to the ones around it. It opened below a swing point and closed beyond it. Once again, we see a minor swing point here with this move lower, this high right here. And it's just a great area to be placing your stop loss. Once again, the majority of you would go and say, I need to place my stop loss here, which once again, I wouldn't agree with because it's not necessary. If the market is going to break this floor right here, right, and it's going to drift and break this floor, then you want to be first one out. What is the point of being the last one out? Which is to say, why do you want to wait here? Why do you want to say to yourself that this is a good area to be placing your stop loss? One, there's a high chance that you're going to see the market spike for a short period of time as we go through the swing point, and that's going to mean you're going to encounter slippage, and everyone else has their stop losses here. Sure, it doesn't mean that it can't work, but if it's going to work, at least how I view the market, then you're better off placing your stop loss below this thrust candle or this thrust candle, even though I think that this is too tight for my liking, and that's why I went another thrust candle back. The euro dollar, which I had a limit order on right here to go long, is another great example, and with this example we're just gonna be finishing this. Once again, clear as day, this candle right here is your thrust candle. We have a swing point right here, which is where I've denoted my break in market structure, and we can look to place our stop loss here. If the market pulls into a discount level with a naked wick, you could expect the market to potentially move higher just like that. So yeah, that is the thrust candle principle. Hopefully it made sense. If it did, then please leave a comment, and I'll see you in the next video.